Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. So in general, gold had a solid week, though we've had a couple of dips. And right now, the bulls are still calling the shots in the market. Tensions in the Middle East are juicing up that safe haven demand. However, the U.S. economy's robust performance, hot inflation, and the Fed's cautious stance on rate cuts have somewhat put a lead on how high prices can go. Traders are now watching the geopolitical drama unfold and eagerly awaiting the US PCE inflation data drop on April the 26th to give them some trading direction. So firstly, and as always, let's review the gold against US dollar daily chart. As we can see, gold's still bullish, but last Wednesday and Friday, bears made a move. After around 10 days of smashing through record highs, Wednesday saw a slight dip of less than $20. Nothing too drastic though. Then on Thursday, boom, another record high, with the bulls pushing it even further on Friday, briefly touching $24.31 per ounce before taking a breather. And as we kick off this week, gold's still climbing, but RSI is chilling in the overbought territory. Yet, yesterday's candlestick pattern looked like a bit of a mood dampener, hinting that the upward push might be losing steam. Prices are hovering around $23.80 now, with last Friday's peak acting as a ceiling. And if gold takes a step back, the $2,300 mark might provide some psychological support. Now, you may ask what's really propping up the gold prices at the moment. I mean, from my perspective, it's that sudden escalation in conflict between Iran and Israel. I mean, their tit-for-tat strikes have cranked up the heat in the Middle East, and with the Russia-Ukraine standoff and the Red Sea back in focus, market jitters are through the roof, pushing gold, the ultimate safe bet, through the roof too. So everyone's saying that they don't want things to escalate further at the moment. So the gold market's kind of in limbo with no clear direction. And of course, as we talked about in last week's video, central bank purchases, especially led by the PBOC, is still a big driver. And institutional investors jumping on the momentum bandwagon have also given gold a boost. But retail investors seems to be less interested, with gold ETFs seeing some outflows recently. Meanwhile, while the Fed's rate decisions and the U.S. economic data might not overshadow the impact of geopolitical issues on gold prices in the short term, they are still keeping gold's upside potential. Like Fed Chair Powell played it safe yesterday, saying that they can keep rates steady as long as needed if inflation stays high. Plus, Monday's retail sales data beat expectations, and labor, manufacturing, including services, are all looking good, showing the U.S. economy's got some backbone. The 2-year U.S. Treasury yield briefly touched 5% yesterday, and the first rate cut's been pushed back to September from June to July, with barely 40 basis points of cuts pricing for the year. With rate cut expectations fading, the longer-term rate advantage of the U.S. dollar over other currencies, and with everyone still on edge, the U.S. dollar index is flirting with 106.5. That's hiking up the opportunity cost of holding gold, putting pressure on prices. But playing it safe also means there's a higher risk of Uncle Sam and some heavy indebted companies going bust, shining the spotlight on gold's safe haven status and boosting prices. So overall, gold's been riding high lately, thanks to the surge in safe haven demand sparked by the geopolitical tensions, central banks loading up on gold, and institutional investors jumping in have also fueled the fire. But with pressures from the Fed rate policy and the U.S. economic data, the short-term fundamentals might not support another big push-up in gold prices, especially since gold's already soared over 18% against the US dollar since the start of the year. Traders need to keep an eye out for the profit-taking, and if there are not any major twists in geopolitical tensions, gold might just chill at these lofty levels this week, where we can see a small pullback. Besides the geopolitical developments, traders got to keep their ears to the ground for March's US PCE PCE data dropping next Friday. Unlike CPI, I actually call PCE is more of a direct reference for fast playbook. February saw PCE jump by 2.8%, and if the latest data mirrors CPI's heat, it might push back the rate cut timing and the magnitude even further, giving the US dollar a boost and putting a damper on gold. So that's pretty much for this week. If you have any comments or thoughts about where gold might head next, please leave it in the comment box. I'm more than happy to discuss. Yeah, so stay tuned with Pepperstone for more insights and updates. And until then, happy trading.